I don't know about you, but I've noticed more and more that finances are tightening up for a lot of people right now. Our government's been printing money like crazy, and if you go to the gas station, you'll see that gas prices are up over $4 a gallon nationwide, and here in Cali, they're like $6 a gallon. Also, if you go to the grocery store, you probably notice your bill after you do your shopping, it's probably double what it was in the past. And to top it off, if you're a recent college graduate or the parent of one, you probably notice that the student loan repayment plan is starting up again after it's been delayed. Well, don't worry about it. It's only a couple hundred grand to go to college now. So what do you think people are going to do? Continue spending and just run up debt? Yeah, but I think a lot of people are probably going to try to be more practical as well and cut back to only the items that they really need to live day to day. And you know what? Maybe they're going to try to make more money, maybe a side hustle, maybe option trading. Well, hey, there's definitely a way that we can use this information to maybe make a bet, place a trade, and make some extra money to help pay those bills. In this video, we're going to cover what is the Consumer Discretionary ETF XLY. Where is XLY year to date price-wise? What is an option strategy that we can use to profit on less consumer spending? How do you buy a long put debit spread in XLY? How do we manage the long put vertical debit spread? Hey guys, Darren here. We've got a great video for you here today. Although, before we start, if you appreciate the information and research that goes into making a video like this, all I ask is that you do me a favor and hit that like and subscribe button. It goes a long way and really helps the channel, so thank you very much. Today we're covering the long call debit spread in the ETF XLY, which is the Consumer Discretionary ETF. I think it's super important that we understand the ways that the rich are getting richer. We want to be able to use the same tools and strategies that they're using so that we can profit in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Ticker symbol XLY is a consumer discretionary ETF, which stands for Exchange Traded Fund, and it has 52 different holdings. We know that the consumer means all of the people like you and I that purchase goods and services. Discretionary means available as needed at one's own choice. So in other words, you may be able to get by without it. I mean, if we're struggling to pay our bills, are we really going to pay money to go on a cruise on Royal Caribbean or Carnival? And if gas prices are at highs, are we going to choose at our discretion to go on a long road trip and stay at hotels like Hilton, Caesars, and MGM in Vegas? Or are we going to just use that money to maybe pay our mortgage or fill our car up with gas so we can just drive to work and keep our job? These are the reasons that I think XLY may decline in price. Here's a chart showing XLY all the way back to 2009. XLY is currently trading at 163. If we draw trend lines, you can see a distinct channel and we are nearing resistance. I like to use all of the tools at our disposal so technical analysis as well as fundamentals. We just did a video on technical analysis and chart patterns, so if you haven't seen that one and want to learn more about it, check it out. I'll put a link below and a card at the end of this video so that you can click on it and play it. XLY is already up 25% year to date so far this year, so I'm expecting a pullback at some point. I suspect with inflation still likely to be a challenge through the end of the year, at least that XLY will not break the resistance and drop back down within the channel. If it does break resistance, however, realize that the resistance line will become a new support line. What is an option strategy that we use to profit on less consumer spending? If we are bearish on XLY, then we want to buy a long put vertical spread, which will profit with the decline in the stock price. Normally, I like to sell options, which typically have a higher probability of profit. However, with IVR, implied volatility rating, low like it is in XLY, it makes sense to buy a put vertical spread. A long put vertical spread is a bearish, defined risk strategy made up of a long and a short put at different strikes in the same expiration. Of course, the directional assumption is bearish. We buy an in-the-money put and we sell an out-of-the-money put. The implied volatility environment, again, we want is low. Max profit is the distance between the put strikes minus the debit spread, and we calculate the break even by subtracting the debit paid from the long put strike. So, how do you buy a long put debit spread in XLY? All right, we're going to take a look at buying this debit spread in XLY and break it down on the TastyTrade platform. We'll break down the buying power, max loss, and profit that can occur depending upon the price movement of the stock. You can do this with any brokerage on any platform. However, I do like TastyTrade as it's one of the best brokerages for trading options. It's the one that I've used for many years, and they are the guys that developed the TOS, the Thinkorswim platform, and sold it to TD Ameritrade, which is now Schwab, and they still use it today. TastyTrade is even better. Right now you can get cash back when you open an account. I'll put a link down below, and if you fund with at least $2,000, it really helps out the channel. Absolutely no cost to you, and you need a couple $1,000s in order to place a few trades anyway. We punch in XLY in the upper left to bring up the option chains. Make sure that you are on the trade page. We click on the October 20 regular option chain that is 30 days to expiration and open it up. When buying debit spreads, 30 DTE is usually around where I like to be since the options are reasonably priced as long as IVR is low, and it gives enough time for the stock to hopefully move in the direction of our longer term outlook. We then click on the 162 strike bid and the 166 ask to buy a $4 wide put debit spread. The max profit is the distance between the strikes, $4, minus the net debit paid, which is the $1.76. So it's $2.24. One option contract controls 100 shares, so it's really $224. The max loss is the $1.76 that we paid up front when we placed the trade. This stock has a 52% probability of profit. Now, if we switch to the curve mode by clicking on curve on the trade tab, we can see the profit zone in green. The break even is calculated by the long put strike, the 166 minus the debit paid 176, so it's 164.24. We hit review and send and place the trade. How do we manage the long put vertical debit spread? Guys, many people do not manage vertical debit spreads since they are defined risk, and we know the max loss is the amount that we paid up front when we placed the trade. However, I'm trying out a new strategy that Nishant used to grow his account very quickly. Please see the link below. I'm not certain how this will work for me. However, I'm trying it very small just to see. I think it's important that we always try new strategies and new ways of doing things to see what works for us in our portfolios. I will follow pretty closely what he did by closing winners at around 90% profit. I plan to manage losers by closing the trade if by day 15 the trade has lost 50% of its initial value. I'll let you know how things go. The key takeaways are XLY is already up 25% year to date so far this year, so there may be a pullback with inflation pressures. From 2009 to present day, the chart shows that we're near resistance technically. The put vertical debit spread is a bearish, defined risk strategy that is best used in low volatility. Put vertical debit spreads are often not managed since they are defined risk. However, I plan to manage losers by closing the trade if by day 15 the trade has lost 50% of its initial value. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. There's also a link for options coaching as well as a full automatic income options trading course. All right, appreciate your comments. Let me know any questions that you have. I'll be sure and respond. Remember to hit like and subscribe. Thank you very much for watching. Share it with a friend, and I'll see you in the next one.